Hello everyone, welcome back to ASX Market Watch and charting trend signals around the world, around Australia today as well. Looking at the All Ordinaries, looking at the Australian markets down under. It's a fantastic place to be, and really just making some sense out of the price movements or where price is heading, because price is what you pay, as they say. Value might be what you get, but price is still what you pay. So it's very important to determine which way price is heading, isn't it? At least that's what I believe. And you know what? If you're watching, possibly you believe that as well. But look, let's just jump straight into it, because there's a whole lot of stuff that I really want to go over with you today. And the first one is, well, we're looking at Gann. WD Gann, 75 years or something, at 45 years of those on Wall Street. It wrote so many different writings on the stock market and that sort of thing as well, and the commodities markets, and cycles were part of that writing. And not only that, but also finding future support and resistance were part of his writings as well. So one of Gann's rules was his 50% rule. Now that states, and you know what, this is so awesome. You're absolutely going to love this, because he states that if the market doesn't, or if the market retraces 50%, or gets to the 50%, but if it finds resistance or support at the 50% level, then there's a higher probability that the market will travel 100% of its previous move. So if that all sounds like crazy gibberish to you, let's just break that down a tiny little bit. It's very, very simple, really, trust me. So here's our first move. This is basically where the bear market started in 2011. And what we've got here is from April down to August. That's our initial move. I dropped a fantastic amount, I think 20% odd, which is just amazing, awesome. And you know what? Is that a threat or a bad thing? No, potentially that is an opportunity if you know how to trade on the short side of the market as well. And I'll talk to you about that in a little while, because oh man, there's so much good stuff to go through. Really quickly though, 100%. That's our first move, right? And here, as you can see, it's retraced just recently up to this level, about 4,500. Now, as you can see, it's 50%, so that is pretty much almost spot on 50% of our previous move. So in other words, it did find resistance there. Just as Gann wrote almost 50, 60 years ago, this is part of it. It still happens today. So it's still finding resistance at 50% of the previous move. Now, the second part of his writings there was a higher probability that the market would go 100% of that previous move. And what that means for us, I'll have to enlarge this a little bit so we can get the whole move in, because it's very, very interesting actually. There, as you can see, is 100% of the previous move, and that brings us down to 3,200, or approximately the 2009-2008 lows. So, in other words, according to Gann's theory, or that part of Gann's theory, then there's a probability that the market may hit 3,200 before this bear market is over. Now, let's just break this down a tiny little bit more, because over the last couple of months, and I promise you're absolutely going to love this, because it is absolutely fantastic. Over the last couple of months, there were two patterns that could have been evolving. I was rooting for the upside, but you know what? You don't always get what you want. But as the Rolling Stones say, sometimes you just might get what you need. But anyway, as you can see, up, down, up. That's a zigzag pattern. That's one part of Charles Dow's theory, higher peaks and higher troughs. Not rocket science in any way, shape, or form. That is one pattern that was potentially evolving, and that would have been a bullish pattern with a break to the upside above that level. It just got there, and then basically it was a false breakout. So in other words, the pattern was false. Now what that means for us, again, if we look at that a little bit further, is that we now have to look at the other pattern that was evolving, and that is this giant 8-month continuation pattern. It's a consolidation pattern. What it means is that there's no real market data. People don't really know where the market is heading. It needs a new catalyst for the market to break out to the up or down side. And basically, what that catalyst at the moment is happening is all the crazy stuff in Europe and Greece and all that sort of thing in the Eurozone. Obviously, unless you've been hiding under a rock for the last year or 2 years even, you will know all about it. So, in other words, the market has, and again, we put our stop losses in. I told you where they were. I told you where the market would be wrong, or this signal would be wrong. It's hit that with ease, approximately there and approximately here. And since then, the market has absolutely tanked. And in other words, it's also broken down below this trend line, and since then it has tanked as well. So that's a continuation pattern, basically. Yeah, and that's just one of those things. If you want more details on how to specifically trade, where to put your stop losses and everything, I have that at the site at asxmarketwatch.com. It's absolutely fantastic. It's really good stuff. But yeah, anyway, that is the long story short. Now, last part of this, really quickly, is time. So as the market moves in trends, obviously we've got a trend here, we've got a trend here. So yes, the market moves down, up, down. It moves in trends. It's never really stationary. It's sideways trend, uptrend, downtrend. It's always moving in one particular trend or another. However, the market also moves in cycles. So from trough to trough, the market moves from low to low in a nice little bouncy ball, just like that, like a rubber ball. It goes up, down, and then it repeats this. It repeats up, down, up, down, up, down, and these are the cycles that the market repeats. So last week we looked at one of those cycles, and that was the 14 or 15 month cycle. Now, you know what? That's not written anywhere. That's just something that I've personally found. And if you check out the markets over the last, on the All Ordinaries, that is, on the Dow Jones, I think it's around about a 12-month cycle. That actually works quite well, a 12-month cycle, at least what I've found personally. And yeah, so 14, 15-month cycle on the All Ordinaries, that's what I've found personally. Obviously, there's an orb period, and that orb period is 1/6 of the time, so we're looking at about 2 to 3 months. So within 2 to 3 months of that cycle length. I hope that makes sense. Sorry if it doesn't. My apologies. Check out Ray Merriman's books. He's really good stuff. The basic books are probably enough to get you up to speed on cycles, and I think cycles are part of your analysis, or they should be part of your analysis as well. Anyway, long story short, as you can see, there's one move. It went from up down, very simple as you can see, and since then we've gone up. And we're just heading into our down leg now. At least this is, if we're looking at this analysis, that's what it's telling us. We're past the 50% mark, which means what happens, in a bounce, like in a rubber ball bouncing, it goes up, and then the arc starts to head down as well. So in other words, the cycle starts to head down, and if we're past the 50% mark, then there's a higher probability that we're on the down leg. And the trend signals are telling us the same thing. It's not really rocket science at all. So again, if we're checking out the whole entire story here, looking at Gann and looking at cycles, and I've just messed that up a little bit, but it'll give us a basic idea. Yeah, that's about right. So in other words, the orb period would start in August 2012. So in other words, we may be looking at a bottom between August and sort of November 2012. That's your orb period. That's the leeway period that it would give using this type of analysis. And the using Gann's analysis that we were looking at just before, if we're looking at the 100% level, and again, this is nasty stuff, but we're looking at 3,200 approximately, and so that might be your level there. Now, of course, there are many support levels in between that. So you've got your 75%, which is very strong, 61.8, which is very strong, 50%, which is extremely strong. So yeah, look, I mean, predictions are fun to do, and they make great dinner table conversation, but you still obviously have to follow the trend, and that's really, as one person said to me this week, trade in the now, like be in the present. That is the only place where the trade actually matters. So turn off CNBC, turn off all these crazy predictions that people are making. They don't really mean anything, including my own. So I'll be completely honest, but this is just one method or two different methods that we're using that have been used by others throughout history, and it's a little bit of fun, and it's it's good to actually see these things where these types of analyses are telling us that the market is going. Now, one last thing, guys, before I let you go, really quickly, if the market is heading down, what should we be doing? Well, either we should be not holding long stocks, or we should be selling stocks short. So selling stocks short, what would be the best markets to be doing that? What sector have we been saying over the last 6 to 8 months that has been lagging behind everyone else? That is the materials sector, the resources sector. And, if you're going to short a stock, wouldn't it be smart to be shorting a stock in a weak sector, or in other words, a sector that is potentially flailing and it's very obvious, as you can see, the red line well underperforming the blue line, which is the All Ordinaries. Looking at other ones as well, other sectors are starting to flounder. The energy sector is one of those that's quite a weak sector at the moment. So shorting opportunities abound in those ones. Healthcare is still killing it, obviously. Which is good. Industrials is coming back down to earth. There have been a few tanks during the week in industrials. And basically that's about it. Those are the two main ones, materials and energy. They're the two weakest sectors currently at the moment. Guys, hope that helps. Hope that makes a little bit of sense. If it doesn't, I apologize. But apart from that, happy trending until next week. Bye for now.